Before we start every one of these presentations, we always do a high risk disclaimer. Those of you that have been around for a while know what this is all about. Those of you that have not and would like to read it, please feel free. Basically, it just says that we're not giving you personal advice. This is not personal advice. This is general advice. It doesn't take into account your objectives, financial situation, or your needs. You should always seek independent financial advice. Past performances that you see today are not necessarily indicative of future success. Every presenter has told you that today. So they're just showing you the possibilities of how some of these things could happen. No one's guaranteeing anything. They're only showing you ways that hopefully increase your probability. These guys have all been doing it for a very, very long time. So for me, I only got good at things because I was lucky enough in my life to be around some people that were a little more experienced than me, in my case, a little bit older, and they were able to teach me some things along the way and help me out. So I've always been appreciative of it, and that's why we run these events. Rod, let's go to your last, to the next slide. So today we're going to be talking to Serge Berger, who's from thesteadytrader.com, and he's going to be teaching us how I sell options for big gainer stocks. And this is going to be super interesting. Now, Serge has been an active trader since 1998 with a background in financial analysis and trading various instruments. He's developed his own trading methodology that categorizes markets into different time frames and characters, allowing for clear decision-making and application of effective strategies. Serge's focus on high probability setups and strict rule following, which is important, has led to consistent growth in his trading account and the accounts of his clients. We're happy to have him back. He joined us a couple of months ago and he's here again today. Serge, how are you today, buddy?
Hey guys, how you doing?
Good, man. Where are we talking to you today from?
I'm in Switzerland right now.
Are you really? That's crazy. Our last guy was in Sweden. You're in. What are you doing in Switzerland? You live there?
Work, between here and Florida. I'm always back and forth.
Okay.
Investment advisory company that has clients on both sides of the pond. So, it keeps us busy.
Awesome. I think the last time we saw you, you were in Florida. Listen, we're going to give you the dais. We're going to give you the screen share. It's all yours, and I'm looking forward to watching the talk.
I appreciate it, guys. Thanks so much. Perfect. I'm gonna, just in full disclosure, I'm gonna turn this camera off in a couple of minutes, just for my own distraction, because otherwise I can't focus on what I want to show you guys. Actually, I'm kind of curious, what do you guys all feel like about this market right now? I just got off a conference call with an institutional investor about half an hour ago. We were talking about we're just talking about kind of the bifurcated nature of this market right now in terms of economic growth continues to slow. Yet we're seeing, sort of long duration assets continue to rally. I'm just kind of curious if anyone has any thoughts around what you guys think about that. I can tell you what I think, but that may not be all that important. I mean, I tell you what, I think we're whistling past the graveyard. Not to say that I think markets are going to fall off a cliff, but it's pretty classic, risk off environment broadly. We're one headline away from something kind of breaking a bit more. And again, I'm not here to spell doom and gloom. I'm really not. That's not my thing. I think it's, you have to go be a bit more realistic about markets. But what we're definitely seeing is that markets are basically going sideways. I don't know if you guys noticed this. You guys aware that markets have gone nowhere for 2 years? And let me be clear what that means. S&P 500 is the benchmark for what I just said. Has done nothing. And we have a lot of clients, advisory clients at a company called Blue Marlin Advisors, which is our investment advisory firm. And of course, for research on the Steady Trader. But really, we're basically, from what we're seeing, we're one headline away from something snapping, and it could be an unemployment number like we had last Friday. That comes in lower next. You guys, how about this? I'll show you, and I'm going a little bit off topic here, but I this actually is for a reason. I don't know if you guys are aware of this. We've never had 14 months in a 14 straight. Here, I'll show you this. Check this out. So this is 14 non-farm payroll reports in a row that have been better than expected. Just take a minute to look at this chart. Maybe take a picture of it with your phone and think about it tonight. This has never happened before, at least not for the past 22 years. So some mean reversion ultimately is likely going to be expected. So anyway, I just wanted to give you some food for thought. But I do think we're, it looks like some of you guys are agreeing that, underneath the surface, things are certainly shifting. So that's also what I'd like to talk about a little bit is kind of where we are here in the broader sense of the economy and how this could change things. And so, I think I'm just going to skip right to it. I'd like to give you an example of a client of mine, John. His real name is different. It's based on this is a real person, like not this figure here, but this is a real person, and I changed his name. But he came to me last September, so September 22, and he had a problem, and the problem was that he started losing a lot of money, and it's actually not funny. But what we found to understand is that he was making a lot of money over the years, but it wasn't so much because he was very skilled as a trader or investor, but largely because the market went higher. So if you look at the market over, a longer term stretch, you can see it tends to go up. And so the S&P 500, for example, went vertical, and he largely made money because of that. And so this all kind of changed last year. And you can see that John made almost $1 million in the first half of 2022. If you look at the upper part of the chart here, with the green line, you can see that, and this is his actual account, right? This is
Serge,
not.
You're not screen sharing.
Oh, Jesus. Sorry, guys. How's this?
There you go. Sorry about that. I was like, is he talking about a chart? Because he's not showing one. I was waiting. I didn't want to interrupt you. I apologize.
No, that's fine. And I'll turn off my camera. I think that's what happened. It distracted me. So I'm gonna turn it off. Let me see here. I think it's this one here. Okay. Anyway, so John actually was making a lot of money over the years because the market went higher, but last year he made $1 million, and then it all basically came crashing down in a matter of a couple of weeks. So what took him 6 months to make, he lost in a couple of weeks. And as you can imagine, that's obviously very frustrating. And I'll go back to that other chart for you guys later on. And so what he said is he wanted to kind of get rid of this problem. And I agree. I mean, this is obviously a frustrating thing. I'm sure a lot of you guys have probably encountered drawdowns, and certainly myself including. I'm actually going through one right now, not this big, but it happens, And so what we think is, if you look at this chart here, the only thing that really matters here is a 2.4%. This is Morgan Stanley's forecast for the S&P 500 annualized return for the next 10 years per year. And they think the S&P is only going to make about 2.4% per year. And so far they've been right. This chart's a couple of years old, and so far they've been right. And the market's gone sideways. So we need to be cognizant of that in order to make money going forward. And so a lot of people are once again in chart chasing mode because stocks are going up today. Small caps are breaking out. But underneath the surface, things are shifting, and things mean revert. This is not a directional market. This is a mean reversion market. And so what I'd like to show you is our way of taking advantage of markets that get extremely overbought very quickly or oversold very quickly. And because we expect really lower stock market returns. Notice what that means. I'm not saying stocks are going to go down a lot. I'm saying over the years to come, just like the past 2 years, the stock market's not going to go much of anywhere. And that can be very devastating for people over time. So let's have a look at this. And I think this is something that everyone can do. Again, I'm not here to promise amazing future returns. That's not the point. This is an educational session to kind of make you see how the way we look at markets. And this is actually a strategy that was taught to me about 15 years ago, actually a bit more than 15 years ago, by one of the greatest credit hedge funds that I ever met. And they were doing something that it took me a long time to understand, not because it was hard, but because it's not being taught. And so I think it's a simple adjustment actually that one can do to really put the odds in our favor. So I don't know, is anyone here looking to generate income from their portfolio? Like, type in a yes if you like to generate income, whether that's on a monthly basis or quarterly. Does anyone kind of fall into that category? Usually about 80% of people will fall into that category. And let me be clear. Let me define what that means. I'm not saying that's your only goal. Obviously, we all want to grow our nest egg, right? But some of us may have a somewhat realistic goal, which is to make money on a quarterly basis, right? I think what's important is this chart here, just to maybe put this into perspective. If your goal is to make money on a steadier basis, and you're just basically long stocks, like chasing chart breakouts, for example, just understand what the performance tends to be throughout the year in something like the S&P 500. And the exact magnitude here is not important. It's more like the random distribution is what I'm after. So you can see that the S&P in general can make money and it can lose money in any given month over time, throughout the year. And so if people who have it as one of their goals to generate income from the market, but they're basically directionally always either long or short, like what the S&P does, they have almost no chance of making money over time. This is all just, it's about facts and statistics is really what this is all about, right? And I think this is important to understand. I think another thing that people tend to confuse out there is making money every single week. I'm here to tell you, and this is not to sound discouraging, but just to be realistic and to be fully transparent with you. But if your goal to make money every day, every week, I hate to tell you, but this is not the kind of business that can allow you to do that. It's just statistically not going to happen. I've done this now for 26 years. I've worked with tons and tons of hedge funds and professional investors. That's not a realistic goal. But a bit more on a quarterly and monthly basis, that's much more realistic. But even that needs to be done in a proper way. And that's what I'd like to show you here, what we're doing and what we have been successfully doing. And I'll show you guys our track record so you can kind of get your head around this as well. But basically what tends to happen, and I'm going to speed up the process a little bit here because I'd like to give you guys access to our indicator as well that actually gives us these opportunities every single week. But a lot of people tend to basically stagnate. So if you think about this mountain range here, people tend to do a bunch of good trades, and then they have one or two bad trades, and they start right back from the beginning. And they climb up the mountain, they have a bunch of good trades, and they have like one or two bad ones, and they start right back from the beginning. I would imagine this probably looks familiar to a lot of you. It certainly does to me, quite frankly. If we take as a next step, is what tends to happen is when we do this, we end up kind of losing confidence in not only the strategy that we're deploying, but also in ourselves. And I see some of the comments here, like Michael, sounds like you're maybe falling into this camp. And again, I've done this for way too long, these losing strategies, until I started realizing that I need to do something a bit different just from a statistical perspective. But if we lose money, we end up breaking rules and enforcing trades, and it kind of goes down this rabbit hole until we're finally actually just gambling. And I'm sure a lot of you can probably associate with that feeling, and that's not a lot of fun. So remember John, we talked about John. Again, remember what he did is he made almost $1 million last year. This is from January through mid-June. And then he lost it all in a matter of a few weeks. Like, this is his actual account. I'm not making this up. And then he ended up actually being down on the year. And it happened because he's very directionally exposed to the market. And this is not a directional kind of market. So what I've been teaching John is a strategy that doesn't take a lot of time, but he has a lot of he has a lot of repeatability with this, and that's really the most important point. So everyone can tell you that their strategy is low stress and high probability. I think that's kind of a useless thing to say, but it's very repeatable, right? And I think the repeatability here is, to me, is the most important bit. So when we look at charts, and if you guys can look, you can look at a lot of tech stocks right now, for example, they will look a little bit like this, meaning they had steep moves and then they go vertical. But at some point, be it a stock or an ETF or something else, will get extremely overbought for a little period of time, maybe just 2 weeks or two or 3 weeks. And there's a huge opportunity that happens in those 2 or 3 weeks. It can happen to the downside as well. You can see a steep drop followed by vertical collapse, and then the asset in question will basically stall. Like it'll stop going lower for a period of time. Usually 2 to 3 weeks is kind of our holding period for this. So what do we do? Well, when steep slopes go vertical, basically, investor fear or greed reaches extremes. And the reward to risk for what I'm going to call a counter trend trade here for the minute, for lack of a better term, become really, really good. How many people here have ever traded an option before? I mean, given I was listen to Andrew before, who I know very well. Do a lot of you guys trade options? Type in me if you trade options. Just kind of curious. But what happens with options is what's being taught is that if you want to generate income, you have to basically sell options. And while technically I agree with that, the problem is a lot of people do this, in my humble opinion, and certainly my empirical evidence, do this in a very extremely risky way. What they're being taught is that if you buy an option, you have a low chance of making money, only 25%, because 75% of options that are held to or near expiration expire worthless. So then what they're being told is all you have to do is do the opposite. So what they're being told is, and listen, all you have to do is sell options, and it'll be profitable because 75% of options expire worthless or near expiration are worthless. And while that's technically true, what ends up happening is they end up blowing up their account over time. And I say over time, it's a matter of, sometimes it can happen in weeks or months, but it can take years as well. And I speak from empirical evidence here. This is not me making this up or hating on people who use risky short-dated option strategies. I'm just telling you what's factual. So as a former hedge fund analyst, it's one of my things. I can tell you that is what happens. And it's not an if, it's a when. So a lot of people are drawn to very risky short-dated option strategies. So they'll be told to use weekly options and theta. And I'm just trying to help you see what the statistics are over time. And so they end up blowing up their account over time. Again, it doesn't have to happen immediately, but it tends to happen over time. And so what we're going to do is we're going to do things a little bit differently to avoid all that. And so let me just take you through the steps. Again, we're looking for very steep slopes that have gone vertical, and I'll give you access to my indicator later that'll show us when these extreme overbought and oversold situations have been reached. But you can see once an asset goes from steep to vertical, it tends to stall for a while. And in this case, either go sideways or lower. And that's really the only bet we're making. So we're not making a directional bet. Or here in Netflix, you can see steep to vertical, then it just tends to stall for a while. So essentially what tends to happen when an asset goes vertical, like some of the tech stocks here as we speak, they may not, the stocks may not fall a lot right away, but they're likely going to stall for a while. And that's really what we're looking for. And so that's kind of what we're looking at here. And so let me just show you, I'm going to go through a couple historical examples, and then we're going to go into the current market. So let's have a look at this. This is obviously a historical example, an old chart of Meta. But follow me here for the next couple of minutes, and we'll go into the current market as well, of course, and I'll show you what's happening right now as well, like with opportunities setting up right now. But this is an old chart of Facebook, or i.e. Meta as it's called now, and you can see that within its steep move, every once in a while it would have these vertical rallies. And even though the vertical rallies ultimately would end up mean reverting, that's not even the bet we're looking for. All we're looking for is statistically and factually that once a stock goes from steep to vertical, it tends to stall out for a while, right? So it's a really high probability bet we're looking to make. So let me show you guys what this looks like. And I'm actually going to bring over my chart of Meta so I can kind of doodle on the chart here a bit more and show you this so you can see what it looks like. So this is the same chart I showed you a second ago in Meta. Again, this is an old historical example is the better way of saying that, but just so you can kind of understand what we're doing before we go into the current market. And so you can see here, once again, the stock moved to the upper end of its trading range. Can you guys all see that? Then our indicator, which I'll show you in a minute, told us the stock is morbidly overbought at that point. So if I owned the stock, I would imagine some of you would agree that maybe I could take some profits. But some people who like to be a bit more aggressive, maybe they would want to short the stock at this point, right? Right? I'm sure some of you would agree. Maybe that's something that you would consider doing, or one could consider doing. Or maybe I would buy a put. The trouble is if I short the stock here or buy a put, the stock has to go down for me to make money. Like, unless it goes down, I'm not going to make money. But the stock could also go sideways. Or, of course, as always, it could go higher. So if I buy a put here or I short the stock and I only have a 1/3 chance of making money, you guys all see that? Right? Because unless the stock goes in that direction, I'm not going to make money. And since what the strategy is all about is giving us higher probability, more hits, more base hits, more income, more steadiness. That's the whole point of the strategy. It's not to hit home runs. We don't want to make directional bets as much. So I like to make bets of where the stock is most likely not going to go. So in this particular example, the only bet that we made is that the stock's not going to go up here. Right? So that means that at this point, when the stock gets extremely overbought, it could go sideways. I would make money. It could go lower. And in this case, it could have gone almost 8% against me and I could still make money. Right? So how do I do that? Well, the way we did that is we sold an option here at the 125 strike. And then we bought another option against that because we don't like to do naked options. That's too risky in our view. We bought another option against that a bit higher, and we actually received money up front. So we received $1,000 with 10 contracts deposit in our broker account, or $100 per contract. In this case, the stock did go lower, and I'll show you examples in a minute where that didn't happen, and we made just as much money. But in this case, it did go lower, and a few days later, we were able to buy back that spread for just 24 cents. And so what that means, we were able to make $76 per contract, or $760 per with 10 contracts of profits. But the crazy thing is the stock didn't have to go down for me to make money. It could have just as well gone sideways or even against me for 8%. So I want you to think about in probabilities. That's my goal here, is to make people think in terms of probabilities. Because chart chasers, as I call them, and it sounds derogatory, I don't mean this in a derogatory way, end up having really bad drawdowns. And we want to avoid that as much as possible and go for more consistency of return. So how do we avoid that over time? Well, what we like to do is we don't like to use short-dated options. And here's why. So you can see at the time we put on this trade, in February, we used April options. We didn't use options expiring in February. Because if I use a short-dated option, like an option expiring, next week or in a couple of weeks or something like that, if the stock goes against me, I would lose money. In fact, I can lose money very quickly. But what we like to do is we like to use options that expire much further out, usually 55 to 85 days out. Because if the trade then goes against us, we only lose a little bit of money. So it's either using short-dated options and having the risk of losing three wheels in my car, or using longer-dated option and only having the risk of getting a flat tire. And that over time, magically, and I say magically not in like a unicorn way, but like has really does magical things to a portfolio with lower drawdowns. The other thing, and this is probably even more important, is we only hold these trades for about 2 weeks. So even though we use options that expire, like I said, 55 to 85 days out, we actually only hold these trades for about 2 weeks. And again, the reason for that is because if we hold the trade for much more than 2 or 3 weeks, if we do that, we end up inevitably, once again, sitting back on a short-dated option, right? Which we don't want to do in the first place. Does that everyone kind of understand where we're going? So it's really a question of statistics. And when I was first introduced to the strategy by a hedge fund that I was covering when I was working at JP Morgan, it took me, honestly, I think it took me almost a year to understand what they're doing. It's actually stupid simple, but because it's literally the opposite of what's being taught out there, I just couldn't get my head around it. But this is the way to do it. This is what we do it, I should say. So let's take this to another example. So let me show you another example, and I'll skip the Tesla example. I'll give you an example in the S&P 500 just so you can kind of see this. This is the SPY ETF, and there's our friend John again sneaking in, and I'm showing you this because this is, I think, at a point in time that a lot of people remember. This was actually right near the depths of the first COVID lockdown in March of 2020. And what had happened is that the S&P dropped about 30% in 3 weeks. And I remember going to the office that morning on March 16th. I walked into the office and, we had our morning meeting and we just didn't feel comfortable buying the S&P because it dropped 30% in 3 weeks. We said, that buying it's too risky. But we did think that it would be a good bet to make the bet that it wouldn't drop more than another 18% on top of the 30% that just fell in 3 weeks over the next 2 weeks. So we were able to sell in March put options way below the market, like using June options. So in March, using June options. And so we sold the 190 put. We bought against that, the 185 put. We received $105 per contract deposited in our broker account, or $1,050. That's really interesting about the strategy. And this is what I think everyone should hopefully realize by now. And obviously I'm happy to elaborate more. Is that the market doesn't have to go higher for me to make money. And if you look at this closely, on March 24th, when we closed this trade, 8 days later, right, we closed it for 11.4%. The market was actually at the same exact level it was on March 16th, 8 days prior. So how in the world did we make 11.4% with 8 days later with the S&P going just sideways? Well, that's what this strategy is all about, right? It allows us to make money whether the market goes sideways in this case, whether it goes even against us up to 18% in this case, right? Or of course, in this case, if it goes up. So I think for those people in here that do like to generate income, at least as part of your goals in the market, I would really encourage you to use a strategy like this. And I'm going to show you guys right now how we find these points in time. And like I said before, I'll happily give you access to our proprietary indicator that I built as part of a project we had at JP Morgan when I was working there on the investment banking side. Kind of a secret. That sounds so mysterious, but it was kind of a secret little side project we were working on using credit default swaps. But this is now, of course, being applied to the broader markets. Are you guys following me so far? I just want to quickly check. Oliver seems to like it. Does everyone else kind of, are you seeing where we're getting to? Because what I'd like to do now is I'd like to go into the market and actually show you, how we find these points in time, because it's one thing to understand the strategy. The other point now is to actually find points in time where this, where how we find these oversold and overbought situations. Just before we do that, I think what's important here is this is not a strategy that we want to hit home runs with, because that's not the point of it. It's to hit steadier returns. So particularly for those people in here that get chopped up around the market sometimes, and you have drawdowns, and it's it doesn't make you feel good, and you'd like something steadier. That's really what this is all about, right? And then you can still do other stuff on top of that. You can swing trade and do all sorts of stuff on top of it, by all means, right? If you want to do that. But this is to kind of really create that base layer of income on a much steadier basis, be that monthly or quarterly, or again, whatever sort of your time frame is. And so what I developed when I was at JP Morgan, and we've of course made adjustments over to it on time, is we figured out what constitutes extreme overbought and oversold. on a near-term basis, on a two to 3 week basis. And this actually also works intraday. So if anyone's a day trader, I'll show you this later on as well, if you care. But you guys can see how the stock got overbought there, right? You can see those 2 blue arrows, and you can see how it stopped going higher. That's all we're looking for. We're not asking for it to go down. It just stopped going higher for the next couple of weeks. Or here in this ETF, you can see the blue arrow, and it stopped going higher for the next couple of weeks. It then ended up falling apart, but that's neither here nor there. So what I'd like to do is I'd like to show you just some examples of how we do this. And so I brought over our dashboard just to kind of give you an idea. So here, for example, is Shopify, right? And this is actually a trade. We just closed it a couple of weeks ago, but you can see how our indicator told us the stock is extremely overbought. Can you guys all see that? Those little down arrows that indicate overbought. I'll make this really large so you can see it. And then you can see how the stock basically went nowhere for 2 weeks. In fact, it went from 64 down to 55. It dropped $10. So all we did is we would sell a call up here, way above the market, and then we buy another call against it, and we generate income. We take in income, we keep the trade on for 1 to 2 weeks, and then we just close it out more often than not, but 80% of the time. That's our track record. We close it out for a profit, and we keep that income. So the market doesn't have to go down for me to make money. It could just as well go sideways or even against us to a degree. Are you guys following me so far? All right, so I'm going to show you guys more examples on this. Or let's look at some of the AI stocks here that I think everyone's still looking at right now. So here's AMD. This is just a couple of days ago. See how the stock got extremely overbought? Well, since then, it's gone from 127 down to, whenever this was yesterday's close, 117. So all I would have done is sell a call way above the market, right? So it would look like this. I would sell one up here and then buy another call against that for protection a little bit higher. So I generate a credit. And since that signal, the stock is down about 8%. It's already nicely profitable, so I could close it right now. All right, so this is, it's really fascinating. Or let's look at AI. It's another one I think a lot of people are chasing right now. C3, right? So this thing got overbought, and this thing, since the highs, then actually was down 30% over the, again, this has just happened the past couple of days. I'm trying to show you stuff so you can see stuff that literally just happened. So I'm not trying to cherry pick stuff that's too far out. Are you guys following this? Does it kind of make sense? Yeah. Right. Or like Coinbase is in the news today. So like, I'll show you Coinbase just so you can get some historical perspective, right? So if the stock gets overbought, it'll give us an overbought signal. And then you can see in this case, it ended up dropping then 37%. So all I would do is I would sell a call above the market, right? Sell another call against it. Again, generate that income, keep it on 1 to 2 weeks and move on. That's really what we're looking for. Or I don't know, semiconductor stocks. I'm just trying to come up with things that you guys know. So SOXX got extremely overbought a couple of days ago, and it's going sideways, right? It's not going anywhere right now. That's all we're looking for, is for basically consolidation. Are you guys with me so far? Yeah. What it does, guys, it just over time really puts the odds in our favor, like dramatically so we can have a much higher probability of making money, right? That's all we're trying to do, is hit more singles to make money over time. Or Airbnb. And again, I'm just trying to come up with popular names that you guys know. Let's see if there's a signal here that I can show you. There you go, overbought. So this stock was overbought a little while ago, right? And you can see how the stock ended up dropping, actually peak to trough about 27%. So all we do is sell a call up here, buy a protective call. So you can see that we would make, in this case, we make money whether the stock goes down, whether it goes sideways, right? Or even if it were to go against me to a good degree. So it just means I have a really much higher probability of making money. Make sense? And if you're not quite there yet, guys, just watch. We're going to go through more examples so you can kind of see. But it really, what it does, it just puts the odds in your favor, like dramatically so. It's what I find is a huge game changer over time. Okay. So the way I look for this, we actually built this into an online tool. So our clients, they can actually access this literally just from our website. So there's nothing to install. I know a lot of you guys don't like to install indicators, which I can understand, of course. So all they have to do is click on this little tool on that button, and then it opens up this, and then they get overbought and oversold signals right away. So you can see, like, for example, like a couple days ago, they got this AI overbought signal, right? And look what happened both times. And so this is the most recent one. The stock stopped going higher. That's all we're looking for. TSM, okay? So Tyson Foods, the stock had oversold a few days ago or a couple of weeks ago. And then what happened? The stock ended up rallying 11%. But again, the point is that it consolidated. So we would sell a put down here. We would buy a put against it for protection. We would generate income and move on. We only keep it on for like 1 to 2 weeks. That's all we're doing, right? We're not looking to hold these trades for very long. And the greatest thing about it is that I can literally see the new setups right away on my screen. Like, I'm sure everyone wants to know about NVIDIA, right? So let's have a look at NVIDIA. Well, NVIDIA gave us an overbought signal a few days ago as well. And look what the stock is doing so far. It's going sideways, right? It's doing exactly what it's supposed to do, consolidate. Now, the stock might go much lower, and we're going to make money either way, whether the stock goes sideways, whether it goes down, or even if it goes against us to a degree. And that's really, really powerful, because if you buy a put right now or short the stock, unless it goes down, you're not going to make money. Or if you buy the stock here or buy a call, unless it goes up, you're not going to make money. But we're able to put on trades where we make money whether the stock goes in our direction, sideways, or even against us to a pretty good degree. And that's really, really powerful, right? By the way, just quickly for concept purposes, is anyone a day trader in here? Because I do want to address that. Maybe type in yes if you are. I'll show you some setups, because we had a beautiful buy signal just this morning in the market. I'll show you guys in a minute. Yeah. But just so you know, like, what a lot of people do is they like to create a watch list. So if I have a few stocks, I'm sure everyone here does a few stocks, right? So if I have a few stocks on my radar, like, one of the things that I can do, I can create a watch list, right? So I can create a new watch list. I can give it a name, call it whatever, right? I already have one, not surprisingly, right? And I click done, then it creates a new watch list. And let's say I want to add a few things to my watch list. I'm going to select my Sergio watch list. That's my nickname. So I'm going to, let's say, add NVIDIA in there. So I'm just going to literally click it and drag it up here. And now it's added to my watch list. So now next time, and you can see it's now added. Now, next time NVIDIA gets an extreme overbought or oversold signal, I'll be sent an email, right? Or of course, you'll get it in here inside the tool. So you can see 4 days ago, this was an extremely overbought stock, right? And it's since done exactly what it needs to do, which is consolidate. So let me just quickly, just for illustration purposes, let me just quickly show you intraday. I just want to make you understand that the algorithm works in all time frames. So just for illustration purposes, this is just this morning, and this happens to be a futures contract. This could be a stock. It doesn't matter what it is. This is a 5-minute chart. Can you guys see how the stock, or this, again, this the S&P is NASDAQ futures. See how it got oversold, and then it basically rallied like 70 basis points, right? That's the kind of stuff that we can see happening. And this is live, right? I'm not making this up. I couldn't make this up if I tried. Or like, I'll show you another NASDAQ futures one. This happened the other day. I screenshot it. It got overbought, extremely overbought, the down arrow, and then it mean reverted right away, right? Now, I don't do credit spreads intraday. I do directional trades. But just so for illustration purposes, so you kind of see how that works. Or NVIDIA, right? Since we're talking about NVIDIA, let's see. I know there's some signals on this stock. So here's NVIDIA yesterday morning at the open, right at the open. See how it got extremely overbought, right? And then it went down. So, the algorithm is tuned to work in all time frames, or in multiple time frames, and daily charts as well as intraday. Are you guys following this? Who could see that this would make a difference in your trading or in investing? It's intuitively, once you grasp it, it's a very liberating way of making money in the markets. So as you can see, this is a process here, and it's a process certainly that for us has worked very, very well over the years. So what I'd like to do is I'd like to give you access to the indicator as well, as we said before. And I'd like to introduce you to the options income secrets. That's really how you get access to the indicator as well. So what is the options income secrets package? Well, the options income secrets package is a process that has been helping us to produce much more regular income in the market over and over again. And we're going to give you access to that, what we consider to be low stress, high probability cash flow / income strategy. The benefit is that it gives us steadier and more regular income into our accounts. That's been our proven process for many years. We now don't have to second guess trades. We know that on a monthly or quarterly basis that we have a more reliable strategy with higher odds to really put the odds in our favor. And ultimately, of course, the idea is to put dollars in our account. The benefit further is that we start trading with confidence and we start trading with a process. It gets a little bit easier every day until it becomes second nature. And so I'm going to give you a cheat sheet as well, because I don't, trading can be a lonely process, as I'm sure a lot of you guys have probably noticed. And so I want to give you an edge in the market as well. And that's why I want to give you access to the indicator, the Vertical X Pro, which I just showed you here as well. So how does all this work? Well, I think one of the greatest things about this indicator is that you don't have to install it. You can install it if you want to on one of your favorite platforms, such as Thinkorswim or TradeStation or Ninja or TradingView, or Wealth Charts or Metastock, but you don't have to. You can actually just literally use it on our website, where particularly if you're using it for the credit spreads. If you use it for day trading, you have to install in one of these platforms. But if you want to do options credit spreads, which is of course what we're looking to do, these are the ones you can install it on. If your platform is not listed, you can install it there. But then you can use it on our platform, right? It's fully included for life. This is our web-based platform. I showed it to you a second ago. Literally, all you have to do is click on our website, and it opens up this awesome dashboard that again I'll go back to in a second so you can see it again, right? Like I just showed you in NVIDIA how the stock's extremely overbought right now, right? And so that's nice because a lot of people don't like to install things. Oh, there's John again. But honestly, I think one of the greatest things about this, or maybe the greatest thing about this, is that it gives you access to the highest probability income trades, in my humble opinion, in my 25 plus years of being a professional investor and trader. And so I'm going to give you a platform and a foundation that whether you're new to trading or whether you've been trading for a while now, that you have this strategy, you have this tool that you can rely on a more monthly or quarterly basis to generate income. That's certainly our goal, and that's what we want everyone to go after. So how does it work? Well, everything to use the strategy is included here, and I'll go through that here in just a second. Just quickly though, here is, for example, what David wrote to us. And Dave wrote to us the other day. He said, if you follow the rules that Serge lays out, you can make good, steady income. Again, these are Dave's words. Other people, great indicator, great strategy. It's my bread and butter strategy. Just quickly though, who is this not for? I think for people that are in the markets for fun, for entertainment, I will just humbly submit this is probably not your thing. If you're the kind of trader that doesn't really care whether you make money or not in the markets, I don't think this is your thing. I really don't. I think maybe something else, right? But not this. But if you are the kind of investor that likes to make money, meaning on a more steadier basis with a little bit less volatility and more realistic returns, I think this is something you really should look at, seriously consider. We have averaged over the years 30% annual return. That's our track record using this strategy. And we actually run a fund with this at Blue Marlin Advisors, our investment advisory firm, over the years on an annualized basis. That's been our track record. But the objective is really to turn this into an income machine on a more regular basis. And so the way we can help you use this is the following. I would like to give the first 50 people here access to the Options Income Secrets package, which includes the indicator. It's all for life. So you'll never pay this again. This is access for life. How does it work? Well, the course videos themselves that are included here are valued $199. I'll talk about our member scanning sessions. We do them twice every single month, like for life. That's $497. The Vertical X Pro indicator is included for life, forever, $19.97 value, so almost $2,000. We have an Iron Condors Made Simple video as well. And of course, the cloud-based version of the indicator that I just talked about, that's literally one click away on your computer, on your iPad, whatever, is included for life as well. The total package value is $3,000. So for $397, we're going to give access to the next 50 people to this. That's 87% off, just as an FYI. So basically, you're getting it for life for an absolute stipend. So it's thesteadytrader.com/max. And I see Rod is typed in the link into the chat box. So thank you so much, Rod. I appreciate that. I just want to say that it is limited at 50 people. We're not just saying that. It actually just, the price stops there. If you want to use this with credit card, of course, you go to the website. You can use PayPal as well. And if you want to use PayPal, you just go to the same link, thesteadytrader.com/max. In fact, PayPal even allows you to finance this. I'm not trying to encourage anyone to do that, but I'm just saying, like, PayPal allows you to like finance that into like tiny monthly payments, just as an FYI. We also have a phone number. If you do have questions, or if you're going to order by phone, you can call 401-203-7389, just as an FYI. Otherwise, again, the link, Rod put it in twice, thesteadytrader.com/max. It is limited though to 50 people. I will say that, and we do mean that. And honestly, the reason why is because we don't want to have too many people join at a time. So otherwise we want to give you personal attention. Speaking of personal attention, so what's going to happen as soon as you join, and I'm going to talk about the chat room. Oh my God, 1 second. I'll talk about the chat room. As soon as you join, you're going to get an onboarding phone call. So like literally someone's going to call you personally to welcome you on board and make sure you know where things are, and make sure you sign up for the next member webinar. We do member webinars every single month, twice, and I give you a live actionable trade in every single member webinar, every single one, right? And you can go back and check those. So if you don't want to wait for the next one, the next one's coming up, I think next week, you can literally, as soon as you're on board, you can go watch the latest recording of the last member webinar. It's all on the website, and you can check what the last trade was. And that way you get into it right away. We have a chat room, and we actually just launched this chat room about, I think 2 months ago at this point, which is awesome. Like in the chat room, we're in there, we're showing up your new ideas of things. So here's, for example, this is the chat room literally live right now. You can see people adding in ideas. This gentleman just looks like he just did a trade and told us about the trade that he's getting out. I put in ideas, you know, live stuff. You can see, for example, I posted in the overbought signal the other day on the NASDAQ and so on and so forth, right? And it's all happening in real time. So that's, you have access to that for life as well. It's on Slack, which is an app. That means that you can actually download that on your phone, on your tablet, and of course on your computer as well, if you want to. So that's all available there as well. So again, you can go to thesteadytrader.com/max, or you can call 401-203-7389. Really important to me is the monthly member webinars, and we do them actually 2 times each month for life. So this is all included. $297, that's a lifetime deal. You never pay this again. You only pay it once, and you have lifetime access. Why are these member webinars important? Well, first of all, we teach you exactly how to use the indicator and how to use the signal, right? So that's what we do in the member webinars. But also I give you a live actionable trade every single month live, like literally in the webinar in great detail. We do that twice every single month. And again, it's all lifetime. So this does not recur. This is not a monthly fee or a quarterly fee. And you get access, lifetime access, I should say, to the member webinar, webinars, the indicator, the scanner, the cloud-based version. It's all included for life. So that's that. So also, if you need to go even beyond that, and you need to know how to maybe implement this into your personal portfolio, we can help you with that as well. Right? We can't give you investment advice because we're not an investment advisory firm. I can only do that over at Blue Marlin Advisors. By the way, if you want to find out about that, it's bluemarlinadvisor.com. That's a separate topic. But we can certainly get on the phone with you and make sure you use it properly for your own circumstances. Right? So we can do all that, and we will do all that, and that's all part of the deal. So That's included. Again, the indicator itself, the platform is completely web-based, super simple. Like, again, you'll get an onboarding phone call from one of our team members really shortly. And that's it. It's not a trade alert service. So we will give you access for life to the indicator, the scanner. In the monthly member webinars, I give you twice every single month in live actionable trade alert myself. This is without you even using the indicator in the scanner, right? Like, and you can use that in like just simple like clicks. I'll show you one idea that's setting up right now, Dollar General. Look at this one for an oversold signal. It's triggering. It's not quite done yet because the indicator is still printing, but I'm going to show this to our members in the next member webinar for sure. So that's what's going on. That's what's going on there. But in the member webinars, I give you 2 live actionable trades. And again, this is all in addition to you having access to the indicator and scanner and the platform for life, $397, and you're a lifetime member. So listen, I think I'm just about out of time. I know we're a couple of minutes to go here, but I'll pass this back to the crew here. If you have any questions, obviously we're happy to assist with anything along the way. But otherwise, I'll pass it back to John and Rod. I don't know who wants to take it over here. Put my camera back on.
So Serge, one of the questions in there is, excuse me, somebody who's asking if this is okay for beginners. Do you need to be a really advanced trader to follow along, or?
You don't have to be advanced. So I'll give you an idea. So we have people in, and then the chat room, if you're the kind of person that wants to go in, you do not have to use the chat room at all. Like that's not at all obligatory. It's just if you want to be more involved. No, so you don't have to be at all advanced. I will tell you though, that there are professional hedge funds using this. Like, nah, I'm not kidding. And we run a fund using it as well. Right.
Same indicator.
Same indicator. In the fund, we use the same strategy, but not just the indicator. Right. We will teach you that as well in the member webinars. But the member webinars are important, and they're always recorded, so you don't have to be there live if you don't want to. But I would encourage everyone to join at least one or maybe both of them each month, because we teach you this in great detail. It's honestly super simple, and once you get a hang of using the indicator and scanner here on the platform, you'll love it. I can guarantee you that. But we go through a lot of time and effort. If it didn't work, and I wouldn't care, I wouldn't do all that. But I can see that people really are using it and making money. And so I want you to be successful as well. So that's why we do all this. It's kind of my way of giving back a little bit. Because when John, when I learned this, I think I told you before, when I was watching this one hedge fund that I was covering, I was a investment banker in the fixed income space, like bonds and stuff. And so one of the funds that I was covering, they were doing a lot of credit default swaps. And they were doing this, and I could not get my head around it. But it's actually super simple, but because it's literally complete opposite of what everyone else does, or most people do, it just has such high odds of making money. It's like literally the completely risky option strategies, and you turn it on its head and you end up with something that's amazing. There's a few things that are important, like we don't hold any trades through earnings, right? So in other words, we don't gamble. But it all kind of comes together nicely.
And when we attend the webinars and we show up, is it a question and answer? Do you talk to us? How does it work?
Yeah, both. So what we'll do is we'll go through strategy. I'll give you a brand new trade. So like, for example, last member webinar, we give people this Shopify trade that I actually started off with before, just because I wanted to give someone something that you can kind of get your head around. And we told people, listen, you do exactly this trade. We closed it out. I sent out an email actually to close it like a week later, not even. Yeah. And then of course we address all the questions along the way. What we're doing is we're teaching people by giving them a detailed trade, right? They'll learn exactly the strategy, exactly how it works. And people love that. They love learning with an actual trade, and people put on the trade right there in the webinar. You know, a lot of people, not everyone, because some people can't be there live. So it's fun.
So you're giving them the trade. I mean, obviously there's value in the trade, and knowing that the professional's done this for them. This is something that you're probably going to trade yourself, but you're doing it so that they can learn and they could do this on their own. You're not going to hold their hand through every one of these. The reason for this is because you're trying to bring their education level up.
Exactly. It's that. And it's also so that you can use the indicator, the platform, right? Which is Literally, it's all web-based, nothing to install. And so you can use it and do it and find trades yourself. And if you want more than that, go into the chat room. There's people in there telling you what they're doing, using trades right from the indicators. So all the help in the world. We want to make sure that you're successfully using this as well.
Yeah, that's actually really important too, that people know that. Because I know a lot of people get really intimidated when they hear the word indicator, like, oh, do I have to install something? Am I going to have to set something up? Am I going to be on support doing something I don't understand for 3 hours? There's no installation. This is all, when you say it's cloud-based, you mean they can go on the internet. For the people that don't understand that verbiage, you just go on the internet and use it.
Exactly. They go to our website and again, that's why all of you that are purchasing right now, you're going to get a phone call, like a personal phone call from one of our team members within an hour. If they can reach you, if you don't pick up the phone, they'll get an email. And so you can access it literally right there. It has a click here and it opens up this. Now, if you day trade with it, this is important. I said it before a couple of, if you day trade with it, you need to install it on one of your platforms, right? Thinkorswim, TradingView, a few others, right? Ninja, you day trade because this is it's made for end of day data because we're doing credit spreads. We're not day scalping, right? That's not what the credit spreads are for. Intraday, you install it like I showed you before. Like I have it installed on my Thinkorswim actually for intraday stuff.
And you said there's like up to 6 platforms right now that it operates on?
It operates in a lot of the big ones. So it's Thinkorswim, it's TradeStation, it's NinjaTrader, it's TradingView. You can do Metastock, you can do wealth charts. I may have left out one.
Market Rover.
Well, this is our own platform, right? So the Vertical X Pro is our own in-house platform. That's kind of what you're referring to, Rod. So you literally click there and it opens up.
And it's a lifetime access.
What's that?
So, if I've purchased this offer, then I get the indicator, the Vertical X Pro forever, as well as the options.
Exactly. Yeah, you'll never, we have, and honestly, probably the most, and I know I'm going to be biased here, but it really is an amazing community. Like, and everyone's like-minded, like that's what I said before. Like, I don't think this is something like if it is a trader's goal to kind of put it on red and because you need to pay rent tomorrow or you want to buy a Ferrari or go to Aldi, that's probably not it's not, in which case, what's going to happen anyway. The opposite happens. But really, if you're more realistic in terms of returns, income, steadiness, our track record is 30% a year. Now, that does not mean you make 30% every year, but that's our year over year track record over time is 30%. And of course, you compound that and it works. It's just much less nervous is what it is.
Marisol's asking if the market is not sideways, because you talked recently, or start to talk about how the market's going sideways. If the market's not sideways, will it still work?
Yes, 100%. So
right.
You have made money in huge bull markets, in huge bear markets, in sideways markets, because it's it's very, very near term. Right. It's like 2 weeks are the holding periods. And in any bull market, in any bear market, you get extreme overbought and oversold situations. By the way, if you guys don't mind, I'll show you one more thing. This is right now for those people who are doing the intraday stuff. This is NVIDIA right now on a 5-minute chart. We don't do credit spreads intraday, but it just got oversold. So what does that mean? It may stop going lower for the next half an hour.
Wow.
We're talking day trading. I don't want to get too excited here about this stuff, but just so you know, it just fired off. Like
I could hear the excitement in your voice. You must have looked up at one of your screens and seen it drop, right?
Screens over here. Yeah.
I see. Oh yeah. I saw you look up and go, oh, I got something. It was like you're fishing.
Awesome set of screens.
But honestly, it's really, it's the income part is the credit spreads we talked about, right? So I would encourage everyone to do that. Again, if there's day traders in here, I know all the day traders right now are doing this trade right now in NVIDIA, and that's fair enough, right? But the point for us as a fund manager, portfolio manager, investment advisors, or as a private individual is the income part, right? That's really my main objective.
Okay, guys, the price is on the screen. It's $397. It's a lifetime subscription. I guess it's not even subscription. You own it for life. $397. You can use it on the web. You can use it on your favorite platform. There's a link inside the chat. And for those of you that can't find the chat for some reason, it's thesteadytrader.com/max, MAX. the steadytrader.com/Max. Serge, thank you so much for your time and for showing us this. This is
I
really cool.
appreciate it, guys. Thanks so much. And we'll talk to you soon. Be
All right,
well.
Thank you, Serge.
See you.